Dear students, welcome to my channel, Dr. V.R. Pudili, Professor of Management and Economics. In this video, I am dealing with case study on computation of working capital requirement. Computation of working capital requirement, case study 1. Let us now read the case study. While preparing a project report on behalf of a client, you have collected the following facts. Estimate the net working capital required for the project. Add 10% to your computed figure to allow contingencies. Here, cost sheet of the company is given. Particulars and amount per unit are shown in the table. Raw material per unit cost is rupees 80. Direct labor per unit cost is rupees 30. Overheads per unit cost is rupees 60. Total cash cost is given as rupees 170. The additional information given in the case study includes selling price rupees 200 per unit. The product is subject to GST of 18%. Level of activity 1,04,000 units of production per annum. Raw materials in stock average 4 weeks. Work in progress. Assume 15% completion stage in respect of conversion costs and 100% conversion in respect of materials, and work in progress is in stock average for 2 weeks. Finished goods in stock average 4 weeks. Credit allowed by suppliers average 4 weeks. Credit allowed to debtors average 8 weeks. Lag in payment of wages average 1.5 weeks. Lag in payment of GST average 4 weeks. Cash at bank is expected to be rupees 25,000. You may assume that production is carried out evenly throughout the year, that is 52 weeks, and wages and overheads accrue similarly. All sales are on credit basis only. Let us now compute working capital requirement in the company based upon the information given. There are 4 steps in estimation of net working capital. Step number 1, estimation of current assets. Step number 2, estimation of current liabilities. Step number 3, determination of net working capital. And step number 4, determination of final working capital required based upon the contingency amount given. Let us first complete estimation of current assets. We already know that important current assets include cash, inventories, and debtors. Based upon the information given in the case study, cash at bank is expected to be rupees 25,000. Inventories include raw materials, work in progress, finished goods. Raw materials level of activity is 1,04,000 units and per unit cost of raw material is 80 rupees, and raw materials are expected to be in stock for 4 weeks. Hence, we multiplied 1,04,000 with 80 and 4 by 52. Finally, we got the value of 6,40,000. Next step is computation of work in progress. Here in this problem, raw materials were given as 100% completion stage in work in progress, and conversion costs are assumed to be 50% completion stage. Raw materials amount is calculated by multiplying 1,04,000 with per unit cost of raw material 80, and work in progress is expected to be available for 2 weeks. Hence, we multiplied 1,04,000 with 80 and 2 by 52, and finally we got the amount of 3,20,000. In case of direct labor, we multiply 1,04,000 with 15 rupees. Here, even though per unit cost of labor is 30 rupees, we are taking only 15 rupees because conversion costs are assumed to be 50% completion stage, and multiplied this amount with 2 by 52, and finally we got 60,000 rupees. Similarly, overheads amount was calculated by multiplying 1,04,000 with 50% of overhead per unit cost 30 rupees and stock time 2 by 52. Finally, we got an amount of 1,20,000. Finished goods stock is calculated by multiplying 1,04,000 with the total cost of good 170 and stock time 4 by 52. Finally, we got the amount of 13,60,000. The third component of current asset is debtors. Debtors amount is calculated by multiplying 1,04,000 with 206, and debtors period is given as 8 weeks. Hence, we multiplied these values with 8 by 52. And finally, we got the amount of 32,96,000. After adding all components of current assets, the total current assets value is finalized as 58,21,000. The next step in computation of working capital requirement is estimation of current liabilities. Creditors average 4 weeks, hence we multiplied 1,04,000 with per unit cost of raw material 80 rupees and 4 by 52. Finally, we got the amount of 6,40,000. Lag in payment of wages is calculated by multiplying 1,04,000 with per unit cost of wage 30 and time of 1.5 by 52, and we got the value of 90,000. Lag in payment of GST is calculated by multiplying 1,04,000 with 36 and 4 by 52, and finally we got the amount of 2,88,000. After adding all these current liabilities, we got the total current liabilities amount of 10,18,000. The third step in computation of working capital requirement is finding net working capital, that is equal to current assets minus current liabilities. Hence, we subtracted 10,18,000 from the total current assets value of 58,21,000, and we get the net working capital amount of 48,03,000. Since in the case study 10% margin money for contingency was asked, we added 10% margin money for contingency, that is 4,80,300 for the net working capital we arrived at. Finally, net working capital required is determined as 52,83,300. I had given Working notes for the case study. Working note number 1. A full unit of raw material is required at the beginning of the manufacturing process, and therefore the total cost of the material, that is rupees 80 per unit, has been taken into consideration. While in the case of expenses, namely direct labor and overheads, the unit has been finished only to the extent of 50%. Accordingly, 15 and 30 have been charged for direct labor and overheads respectively in valuing work in progress. Working note 2, debtors amount is calculated as 170 plus 18% GST of 200 rupees selling price, that is 36. By adding 36 rupees GST to the 170 rupees, we got the final amount of 206 rupees. Dear students, in this video, I had dealt with computation of working capital requirement. Thank you.